Now to bring on board my very dear friend Porinju. He's back, and you joining us from your farmhouse in Kerala. I always see the pictures on Twitter. Never ever when you join us on TV. Next time you should join us from the garden.
Oh, wow. Anyway, good morning, Niguncha. I'm in the office in Cochin and very relaxed.
You know,
And
as long as is ET now is playing in your office, I am also relaxed. How you been, my friend?
yes, it's great going and very comfortable about the market. And, good times are there.
Good times are there, especially given that you bought Raymond's, what, 1.5 years ago?
Yeah, 1.5 to 2 years ago. I think we discussed it a couple of times, if you remember. When we were talking about changing investor perception about promoters and companies. So, that I always believe we have more and more Raymonds in the mid-cap segment in the Indian markets, dozens of them. So I think that's where especially direct investors should seriously look at next maybe 2, 3, 5, 10 years. That's going to be a great opportunity for investing community to create alpha.
Your conviction was centered that time, I'm sure, was not on the fact that they will become a real estate company or they will sell their, male grooming segments. It was centered around the fact that here's a national apparel brand and it was available at a market cap of less than $2 billion. That is the reason why I think you bought into Raymond's.
Not $2 billion is far away. It was some 2,500 crores market cap 2 years ago, 3,000 crores, and around that is what we were lucky, to be frank, having that conviction, and we went up to buying nearly 5% of the company in our for our clients, and it was really amazing. So see, when we talk, that Raymond sold this for so much money or whatever, it basically means all these values, these assets were there in the company. So that is how one should look at it. They need not really sell it. Even otherwise, that value is there. For long-term value investors, all these are very integral part of it. And I believe, I think as we discussed, I was, that the trigger for me was, the planning of IPO by Manure. In those days, it was told about, they may come out with an IPO of 20,000 crores. The media was reporting. So I was really surprised. A company which is only a fraction of Raymond is quoting 10 times of Raymond. So this is something, there's a huge mismatch or the gap of valuation. So so it's not an easy thing, all the new IPOs coming in or approaching investors had a different kind of valuation dynamics than the traditionally established brands and companies. So some point of time, a lot of people, promoters perhaps, of the listed companies used to feel we should delist and come out with an IPO next year for fetching a much higher valuation. Anyway, we have gone through that kind of a 2-3 years period. Again, things are stabilizing. That too much fancy for the IPOs are sobering down. I think markets are getting much more healthier and matured, I would say.
Raymond's, what have you acquired? What we're discussing today is your stock you bought 2 years ago. Now markets have discovered it. But now I'm sure you must have done your homework on which is the next big one.
It's not, there are many of them we are holding already. I think still to be discovered by the markets. I think, in the Gunj, our markets have grown so much, it has become much more sophisticated than the past. The regulatory things have become much more in place. And we are a very sophisticated capital market system in India. And too many players, I won't say too many, there are a very large number of players, it is yet to grow further. So it's not going to be easy to create alpha investing in the well-known large cap companies. Of course, investors can still invest in those companies if we believe in the India story, which I am a great believer. I still believe the India's era is just starting. Our times just started only. India is something like, where China was in 2007, before the global financial crisis. And China took really advantage of those things. many of those things were in favor of them. Similarly, and they had a very, very superior growth since 2007. Of course, they were growing earlier also. But today, India, now the kind of geopolitical things happening in the last 1-2 years, the Russia-Ukraine war and many other economic development globally, we are lucky. And we are in a sweet spot, Nikunjas, I have been always maintaining. And, the equity investors in India are basically, they are very lucky. Look at the way how most other markets, including the Western markets, are behaving, how they have made, huge erosion in value of the investing community. So India is doing very well, but more excitement to me is about, when I think for next 5 to 10 years, the macros are so much in our favor, and especially the political leadership, it is doing a wonderful job for the long-term sustainable growth for the Indian economy. The financial discipline we are holding today is amazing. So that is, I think Indians should thank the current government for the financial discipline, the way our financial and banking segment, that sector has been strong in the balance sheet and complete cleanup, the required law enactments like IBC. I think we are in a very different kind of India today. Maybe we should come beyond that petty politics and think of the economy, think of the long-term growth and sustainability, the stability, most importantly. So there are all those ingredients in place. And now today, India, it's like India means scale.
Right.
Look at the scale of infrastructure projects and other aspects of the economy. We are making not only just the tallest statues in the world.
Right.
We are also making, perhaps I was reading the tallest railway bridge, the kind of expressways we are making. Everybody knows about it.
And soon we'll be making something really small, which is we are also setting up semiconductors. So tall and small, big and beautiful, everything comes here. But if you really have to translate that into a thought, for example, you bought Raymond's, you bought into Tata Communications, you bought into Tata Consumer, you were betting on the Tata turnaround a couple of years ago. What is the next turnaround you're betting on?
Yeah, it was, I remember 2 years ago, we were talking about when you asked me about a sector, what are you looking at? I talked about Tata Group because of those sweet spots. And I think there are still companies in Tata Group with a very, very big potential and, for sustainable rewarding of investors. Many of them are still there. And Tata Consumer, of course, it has gone really like a 10-bagger and staying steady at that level, consolidating. Now, I feel, see, the pharma is something we recently talked about. It is already moving. Pharma has been beaten down for a while. And, sell-off, I think it's all over. And there are very steady, stable pharma companies, I think, which are very attractively priced. And some of them have gone up by recently, maybe 20, 30, 40% after decades of depression. I feel pharma is a sector to look at, but should be very selective. I'm not in a position to talk about individual stocks out there. Now, 2 days ago, we were talking about the Gujarat PSUs. I don't know, you remember, we talked about the PSUs and in particular Gujarat PSU. There were indications a year ago, some of the government officials were talking about it. So it's a very, very paradigm shift happening in that culture of managing PSUs. So Gujarat as a state has taken that initiative. This management of PSUs practically never thought about a shareholder wealth creation. They have been focusing on, perhaps CapEx, so much cash flow coming in. So how to finish off that money? How to perhaps, because CapEx have been always, if there are some, little corrupt kind of, bureaucracy, it's easy to make money when the CapEx is done. But whereas if you pay all the dividends, the cash to the investors, they don't make anything because they are not shareholders. So this has been a culture since last many, many decades in India. there is a very big shift happening in this culture. It's very structural. So I would say PSUs, not only the central PSUs, even some of the state PSUs. Gujarat has taken the initiative. That is also as a sector. Some of them are very wealthy. If some slightly differently better managed, these companies could be multi-baggers, some of them.
The same, you use a theory where you always look at the management, and when there is change of management, there is an opportunity and there is a threat. When you see the change of management is for good, as a shareholder, as an investor, you bought into these stocks. That's the theorem which you follow. I also understand, if I look around, if I talk to, let's say, a management of Paytm or a Zomato or a Policy Bazaar, there is a change in perception and there is a change in understanding the need of being profitable, which is that when they were P investors, they were burning cash to grow. Now they're listed, they're understanding the importance of cash flow. They were burning cash, now they want to generate cash. Are you hunting for ideas in that space? Because then there may not be change of management there, but there's a change of policy and there's change of approach.
I don't think it's really a change of policies. They were unable to create cash flows, I would say, even if they wanted to. So the business models have been like that. To be very frank, for me, it's very difficult to make a comment on Paytm or the Nikas of the world. They all are very most modern businesses. So the valuations depends on, it's all in the each person is different. It's different. We can't generalize that. I do not fully understand those business models and the potential cash flows. I still feel some of them are overpriced. It may not move. There could be some of them could be great business models, and it is going to be sustainable. They are going to will be there for the next 5-10 years as a business model. But those stock prices it may not reward. It may not go up for the next 5 or 10 years. There could be that kind of stocks also in that fold. So it's a very difficult place. I would say, in this given kind of, as I mentioned earlier, creating alpha in the large, well-known, discovered companies is going to be very difficult. They will continue to grow with the economy. For investors, they have to look at small and mid-cap segment. Again, it's going to be exciting years ahead, where if you can, catch up with that change in the culture, change in the corporate governance, change in the promoters' attitude towards minority shareholders, those kind of aspects, provided there is a strong, solid business model behind, which is futuristic, which is relevant for the future. So I am excited about those kind of opportunities than a particular segment like the new IPOs and the technology-based businesses. Very difficult to understand for me, for most people, in my opinion. And the experts are going wrong also. So whom should we trust?
Fall of Jan and Feb and March, or Jan and Feb in Adani group of stocks, did you buy them? If yes, why? If you did not buy them, why not?
I never found, as you know, basically I'm a value investor, though I mix certain other ingredients along. So I used to have, in the scuttlebutts, people are very close to, so even I used to have investors under PMS who are close to the promoters, or, many groups that way all over India. So I always go by values. I never found, a comfort of investing in Adani Group companies, even at much lower levels, 3 years ago, even 5 years ago. Though I was excited about the business they are doing, the scale at which they are doing. As a value investor, I could never buy the stock. I haven't done it also. But I am telling you, Adani's, Ambani's, or Tata's, all these are very important aspects of Indian economy. Without that kind of promoters doing things in large scale, our economy will not grow. Now, luckily, our government machinery also thinking in those terms to create infrastructure much in a very large scale. Only China is ahead of us in the scale of implementing infrastructure projects. And Nikunj, we have got So the question was about Adani Group companies. I cannot comment. I have never lost money or made money in Adani Group stocks, and I don't regret. There are so much of opportunities in the market. So I generally avoid, what I do not really understand, or the kind of valuations which I cannot digest. I'm not a momentum investor. We are very sober value investors with a long-term perspective.
There's a lot of value there in OMCs. PSU banks are not expensive. Are you picking any spots in PSU banks, PSU defense, or for that matter, PSU oil marketing companies?
Um, we are not very much in favor of the banks and financial stocks. But regarding PSU oil companies, or the OMCs, to be frank, personally, I feel some of them, the valuations are very exciting. And these companies are going to make a huge cash flow next 10, 15, 20 years, even if EV comes or whatever. So especially in the Indian context, I think these companies have got a huge relevance. Of course, still there is some kind of government involvement in deciding their profitability or margins. So those kind of sentiments are there. But still, I find, maybe those companies, including our Oil India Limited, or it's not the OMC, but even some of those small companies. I used to be very bullish on the Chennai Petroleum. See, a very small market cap, and if you see their scale of operations and the revenue and the potential to make profit if well managed, it's amazing. So all these things are there now. I think I have been very bullish on PSUs in the last 3-4 years. So the defense sector stocks among PSUs have done very well, rewarded all shareholders. I don't know, at these levels, they look very fairly or richly priced, valued. So now people were running after GNFC, GSFC, kind of Gujarat PSUs, the GSPL, and what is that, GMDC. Maybe some of those companies, I think they will be definitely going by the guidelines now recently issued by the government of Gujarat in terms how they are going to be managed, the distribution policy. When there is a distribution policy, say 30% of the profits will be distributed to the investors. It's amazing. It's a huge structural change, a cultural change. This is what is required for the PSUs. So that gives the confidence and stability of the thinking of investing community. So those ways, India, our small and mid-cap segment, a lot of those companies have these issues. As all of us are aware, the promoter quality, the management perception, those things are the biggest challenges when it comes to investing in smaller companies. So a lot of people, conservative investors, used to avoid them, and they used to always go to the proven good companies. They also create wealth more safely, more consistently, maybe at much lower levels. I am still excited about the idea of investing in small and mid caps, understanding the weakness of each of those companies, whether they are curable negatives, whether the promoters or this next generation is going to be respecting the minority shareholders. So those kind of stories are still there in a big way. Some of them are discovered, some of them, the change in the perception, the change in the attitude and culture of the promoters have been already evident. It is discovered by the market. If you remember, many of such stocks have gone from small caps to mid cap and now entering the large caps. So that is where you really make money. There are still opportunities, and this is the period of transformation in the economy. We are talking about, bringing the rule-based economy, and all the acts of the government is accordingly. See, on a political level, we are moving from a dole-based economy to development-based economy, or a narrative. A political narratives or election narratives used to be always dole-based. Some parties are still following that, but we are into, in general, there is an awareness. What is respected now? What are even the voters started valuing not the dole politics. They are looking for the development narratives. So this is a structural change. This will be sustainable. This will take India into a different level.
Porinju, let's wrap it up with one very simple question. When you identify a stock, what are the factors which you look at? I mean, what is there in your checklist when you say, I'm going to buy this stock, or this stock does not fit in my competence, circle of competence? What is that parameter which you use?
See, as a business in India, we will be looking at, the market potential or the market opportunity for that business, which is very important when you're a long-term investor. And, how much they can grow. Maybe some of them their market is global markets. So what is that opportunity size? Is the basic thing comes to my mind. And then, of course, today's parameters, the rate of growth, and this is the size of the company by revenue, the profitability, and this is the valuation given by the market. Some of them are given very high values, valuation like 60, 70, 80 Ps because it is over-discovered. Some of them, a similar business may be valued at 8 to 10 or 15 Ps because of the perception issues. So then naturally we look at the quality, the track record of promoters. So here is the the clue, I would say, Nikunj. It's very easy to understand the track record of the promoters. So what I always try to find in the changing India, in the changing Indian standards with regard to the corporate governance, the regulators are very strict on these kind of things. The kind of transparency required for the promoter or the management to the public shareholders. So those in that kind of an changing environment of governance and ethics and transparency, whether these companies will continue to be like that, badly managed, unethically managed, without respecting shareholders, other public shareholders, or is there a possibility of them changing? Is there an incentive for the promoters to go really professional, stop siphoning of money, and get into that, understand the value, understand the value of going professional and creating wealth through the market capitalization, where you are also sharing the wealth with the minority shareholders. See, only those who are willing to share the wealth with minority shareholders, that companies only create market cap. We have seen it in many cases. So many companies, dozens of companies, which are fairly large ones. I am ignoring the penny stocks. Let us not think about them. Fairly large, dozens of such companies are moving. Like Raymond is getting into a new orbit. What has changed in Raymond? I am telling you, all the same businesses Raymond holding today, when it was 2,500 crores, now today I think it is something like 11,000 crores, where Manyavar is quoting at say 30,000 crores. So, and you see the businesses and the potential wealth creation by these two companies. I'm not telling good or bad about anything. I have disclosed I am holding our largest holding in the portfolio management and AIF.
Right.
I think around 25% of our money is in Raymond. We are very happy about that. We are still holding. We may sell shares, I'm telling after this.
Right.
So investors, please don't take it as, I am very bullish and buy it at any price. I'm not a person like that. So valuation. That is the key. Now, investors should never forget that. Whether a fancied investor bought it, whether it's highly, campaigned IPOs coming up. In any case, investors, see some traders or gamblers or funders could make money in between.
Right.
But normal investors stick to valuation, the future of the business, how the company has been managed and how it may get managed, or is there any change? Is there the symptoms of change in the culture of management? Managing these things much better and professionally, sharing the wealth with minority shareholders. So those kind of aspects are most relevant when you invest in smaller companies, other than our Reliance, TCS, and HDFC banks of the world.
Right. All right, Porinju, thanks so much for joining us. Always enjoy conversations with you on the channel. I'm sure our viewers would have enjoyed it too. Let's take a